Good afternoon, everybody. It's going to be our Summary Markets episode 181. As always, we're going to start off with this week's calendar. Then we're going to talk about our trade plan for ES, NASDAQ, Bitcoin, Ethereum. We're going to talk about oil, and then we're going to close it up with the dollar and the euro. So starting off with the calendar, this is the second week of the month, so it's fairly quiet, not too much happening. Monday, we have a couple of Fed talks in the morning, and that's pretty much it. Consumer credit at 3 p.m. Eastern. That might move the market around if it's a really big miss or something like that, but usually it's low impact. Tuesday, we have small business index at 6 a.m., trade balance at 8:30, wholesale inventories at 10, and that's really about it. Wholesale inventories is the only data that I would keep an eye on. Everything else, not that big a deal. Wednesday, we have the crude oil inventories. If you guys are trading oil, watch out for that at 10:30. And then we have the 10-year bond auction at 1 p.m. The bond auctions have been pushing the market around a little bit, so definitely keep an eye on that. That's going to be 1 p.m. on Wednesday. This is the date. This is the biggest data print this week. On Thursday, we have the CPI month over month, year over year, and the core CPI at 8:30 in the morning, as well as unemployment claims at that same time. 30-year bond auction at 1 p.m., and we have a federal budget balance at 2 p.m. Finally, on Friday, we have the core PPI, month over month, PPI and consumer sentiment, and finally, inflation expectations. That's going to be at 8:30 in the morning and at 10 a.m. The biggest thing to watch out for this week is that CPI data at 8:30 on Thursday. Everything else, not that big of a deal. Like I said, I keep an eye on the 10-year bond auction. Those have been pushing the market around a little bit. So watch out for that. We'll talk about the yield towards the end of the video. Let's go ahead and talk about ES. So we're going to hide our intraday profiles, and we are going to talk about the weekly profile. Let's see here. 1, 2, 3, 4, 5. Going back to Sunday. Let's go ahead and grab our value levels here. So we have the POC at 45.38. We have that value area high at 45.93. And we have that value area low at 44.93. So that is a very wide value area. That's a 100-point value area for last week. One big thing to note, there is no lower tail on last week. So we decreased value quite quickly. We were not able to put in a lower tail. So very bearish and balanced. And we don't have that tail. So if it wants to repair that tail, it would have to come down. Let's take a look here. Upper tail is from 93 to 21. So about 30 points. It would have to come down about 30 points on the low there, which would put it to right around that level at 64. So almost lines up perfectly with that value level. Let's go ahead and mark out our intraday levels that are not overlapping. So we have Friday's value area, 45.07 to 45.51. We still have, what is that? Wednesday's value area high marked out. That has not been tested, just barely did not test it on that Friday push. And then we still have that gap. We have that gap on Tuesday. If we go on the daily here, let me hide my levels. Let me zoom in really quick. You can see that gap on the daily. So this is pretty much the exact thing we did not want to see happen, because now we are stuck between two gaps. We have the daily gap from the rollover all the way back in June. And then we have this gap right here, which I believe that was earnings, I believe. That was earnings, and it was the credit downgrade. So we had some bad earnings, and we had the credit or the bond downgrade, one of those downgrades. But yeah, so we have two daily gaps here, and we're stuck between both of them. If you guys play the daily gaps on ES, you'll know that the daily gaps, the gaps that can be seen on the daily chart or higher, they have a near 100% fill rate. There is pretty much not a single gap on the daily that is left open. We only have these two gaps, if I remember. I don't think there's any gaps besides these two currently. You guys can correct me in the comments if I'm wrong. But I believe these are the only gaps that are currently open. So definitely mark those out in your chart, and you can use those as targets when we get close to them. Okay, so bearish trade plan for ES. If that CPI data is very bearish, we're probably going to come down, repair that tail all the way down to 63, possibly the 40s. If the CPI data is bullish, I would definitely look for a value retrace of Friday. And because that CPI data is coming out, what was it? I think it's Wednesday, right? Let me double check here. Sorry, it's Thursday. So we have a lot of data or a lot of price action that we're going to see before that CPI data. So definitely watch out for this retrace before that. If it does not retrace this Friday value before the CPI, that will be our bullish target. If it does retrace this day before the CPI data, and then the CPI data is bullish, then we will look for the gap fill. So let's say we go up on like Monday, Tuesday, and then Wednesday, Thursday, we can target that gap fill into 4,600. So obviously it will change as that data comes out. I'll let you guys know in Discord and our live stream, but that is the basic idea. The very bullish target is 4,600, and the bearish target would probably be 4,460 to 4,440. All right, let's go ahead and do the same thing for NASDAQ. Let's get rid of our levels here that have been tested and get rid of the weekly levels. All right, that should be good. Let's go ahead and do our weekly profile. 1, 2, 3, 4, 5. We have that value low trading at 470. We have that POC trading at 827. And finally, we have the value high trading at 900. So the NASDAQ volume profile for last week is a little bit different. We have a very obvious capital B formation. So we have that dominant node on the top, we have that secondary node on the bottom, and then a very obvious gap in the middle. So basically how these are traded is wherever the secondary node is, so this node was made first, this node was made second, meaning we were going down in value. Wherever the secondary node is, that is your bias. So because we are going down, that gives us a bearish bias as long as we are protecting the POC of this node, which is pretty much the value low, so we won't have to mark that out, and the gap. So if they do come up and they start to recover that value low, as long as the sellers are protecting this gap right here, they are still in control, and it will most likely continue lower, okay? So it is a responsive type of profile, and it is leaning bearish in this case. All right, let's go ahead and bring back our intraday profiles, and let's mark out the levels that are not overlapping. So we have this value high at 576, value low at 432. Do we have any value here? We do not have any value between these two levels right here. So we have a little bit of value there. That has been tested, but we'll go ahead and mark that out anyway because we don't have any value in that area. It looks like one level I would keep an eye on in between there is from here to here. You can kind of see that little support and resistance flip. So we had an aggressive buy up on Tuesday, and then we had a very aggressive sell on Wednesday in that same area. So keep an eye on that level right there. Okay, so bearish scenario for NASDAQ would be losing this low from Thursday and Friday. First major support would be 229, and there's realistically not a lot of support until we get down to 15056. So you have plenty of room to fall here. So if any of that data coming out is bearish this week, we can easily sell off 200 to 300 points here. If we look at the daily, NASDAQ does have the gap, which I don't think we marked out. Let's go ahead and mark that out. NASDAQ does have the gap below us, but it does not have... Actually, let me see. The gap to the upside is not as clean as the gap on ES. You see how it's kind of filled in already with those wicks? It's not as obvious on NASDAQ as it is on ES. Let's go down to a 30-minute chart and see how that gap is. Yeah, so if we look here on the 30-minute, you can see the majority of that gap has already been filled in. But we can go ahead and mark out the section that has not been filled in. So basically from here to here, that has not been filled in. So we'll keep an eye on that. And that's going to be, give or take, around 15,800. All right, moving on to Bitcoin here. Not a whole lot happening on Bitcoin that we didn't talk about last week. Last week we talked about how if you stayed below this range low here, you are looking for lower value, most likely around that 28,000 to 28,500, which is pretty much exactly where you bounced. You bounced a little bit early, almost to the dollar on that value zone. So a little bit of value there protecting this down move. But look at all these days. It's extremely choppy, but it's still continuing that lower high and lower low structure. So even though it's super choppy, it is still bearish unless we can reclaim 29.5 to 30,000. If it can reclaim 30,000, you're just looking for the middle of the range and the high of the range as your obvious targets. If it does not reclaim 29.5 pretty soon, you are most likely just going to continue this lower high and lower low structure, most likely going down to around 27.5, maybe 28,000. Okay, moving on to Ethereum, pretty much the same exact thing on Ethereum. It is maintaining that lower high, lower low structure. You're kind of like, you know how we talk about vertical distribution on when you're going up? So like when you have something like this where it's just chopping higher, it's kind of like a rising wedge. Typically those indicate that there's not a whole lot of value on that upside and it wants to reverse downward. That's kind of what we're seeing here on Bitcoin and Ethereum. So we have this really nasty vertical accumulation in this case. So it's kind of descending and just chopping out into that, what level is that? 1816. If we don't hold value below this 1816, I'd say within this week, this will probably start to reverse because we're not generating a ton of value down here. If we look at the volume profile, let's look at where most of the volume is coming in on this level. So it looks like the POC is around 1860. Value area high is around 1911. So realistically, let's adjust these levels here. We want to get above that value area high, and we want to get above this POC right here. And let's go ahead and get rid of that. So those are the two value levels we really want to start to reverse. It could definitely pick up steam and squeeze out a lot of these late shorters. So get above 1860 and let's say 1910. If it doesn't do that, we're looking for a value retrace possibly into 1761. Okay, moving on to oil. Oil is just playing out perfectly. We wanted to see this value retrace all the way from 73 up to 82 to 83, and that value retrace has been completed. So basically, if you guys go back and watch our other summary markets videos, we talked about this really big accumulation / D shape And we wanted to see that value retrace from this lower value area low all the way up to this value area high. And then we have obviously this resistance that we keep failing on these highs right here. So value retrace was complete, and now we are completing that resistance into 83 as well. So let's go ahead and extend our targets here. So we completed that level. We completed that. We completed that. We still have this really small gap into like 85 to 86 if we can maintain above these highs. So we have, let's see here, a high at 83.53. And then I would say we've already grabbed most of the liquidity from these highs. So honestly, we're just going to say that 83.53. And where we need to stay above on this side here, let's take a look. Let's grab a volume profile from this impulse. Okay, so it looks like we need to stay above this level right here, which is 78.90. There is also a little node that they are using as a launch pad right there, and that is around 81.60. So if we can stay above 81.60, this little impulse up should continue. If we fail below that level, we are looking for the value area high and this POC node around 75.71. Above this gap, we don't really have a local target. Let me see here. Realistically, it looks like they want to go for that liquidity grab all the way up to 94, grabbing that double top there. Let's take a look at the volume profile in this area. Let's see. Okay, so we have a POC node, a lot of value, trading around 88.30. And then we have this value area high trading at around 90. Okay, so if we break out here, look for the liquidity grab above 83.50. If it doesn't sweep back down, that means that it wasn't grabbing liquidity. It's actually looking for higher value. In that case, we would want to look for the gap around 85.30. And then from there, we want to look for around 88 to 89. Oil has been giving some fantastic moves recently. So if you guys trade oil, be sure to keep an eye on it because it's been giving really good moves, really high strike rate setups, mainly the liquidity setups. Okay, last but not least, let's go ahead and go over to our forex. Okay, so last week we talked about how we were still maintaining this lower high structure, or we were going into that lower high structure, and we wanted to see if it was going to fail that trend line. And indeed, it looks like it is. It tried to break out. You had a nice little breakout on Wednesday, but then you put in this top doji, this little micro pullback candle on Thursday, and we are confirming that as a bearish candle with Friday's sell-off. So this does indeed look like you want to continue this lower high structure. If the data comes out this week and it's very bullish for the dollar, look for a break of this micro pullback candle into that 200 EMA, possibly grabbing those highs, which let me see, they're trading around 103.54. So bullish CPI data, look for a break into the 200 EMA and then 103.54. If the data continues bearish, we are most likely coming back down to this support around 100.8. And then we have the whole number around 100 as that main support. All right, looking at the euro here. The euro, pretty much the same as the dollar, obviously just inverse. So we're continuing that lower low and lower high structure. If we can fail this level, I'd say failing to hold above 110.08, or sorry, 110.8, then we would most likely go down and put in a lower low, which in this case would put us to 109.3 to 109 even. If the data comes out bearish this week for the CPI data, that would be bullish for the euro, and we would possibly look for a retrace collecting that high around 111.7. So keep an eye on that. The CPI data will definitely determine how these currencies are moving. One final note is if we go back to the dollar here, we do not have a very significant correlation. So if that data comes out, make sure to see if that correlation is coming back. Most likely it will. Typically on CPI data, there definitely should be a correlation. But all right, guys, this was the summary markets. Hopefully you guys enjoyed this video. Make sure to hit that like button if you did. Make sure to subscribe if you guys are new to my content. We do stream 5 days a week, Monday through Friday, 9:15 in the morning. So I will be seeing you guys tomorrow for our live stream. Have a good rest of your weekend. I'll catch you guys tomorrow. Peace.